Welcome to my Monday Musings today, 29th of February 21. As you know, I normally look back over the fun and games of the last week and how the markets have reacted. But this week, apart from a brief comment on the FTSE 100, which had a poor week, it was down some 2% on fears of inflation. In fact, the DAX and the CAC 40 had a similar result. The issue at stake is the economy is overheating because of the support being given by governments and central banks. I'll talk about this more next week. The main issue that Rishi has is the same as us taking out a mortgage at a rate we can afford, but without any guarantee that the rate will remain low. We've got to hope that we'll get a pay rise in time. Rishi must find the money to pay the bill, and the only way he can pay is to raise taxes. Rishi may well be going to upset some of his old school pals at Winchester College, or his old city friends if he goes ahead with the changes that are being mooted. These would see the wealthiest members of society paying most of the bill. This is a good thing if you believe that the rich should be responsible for most of the COVID mortgage, but probably not if you went to Winchester College or a similar school. It looks likely he will raise corporation tax from its current 19% to around 23% over the lifetime of the Parliament. Although this is a big increase, with the US also likely to increase the tax, we will probably still have the lowest rate of corporation tax in the G7 countries. However, a lot of business owners and major corporations would be pretty hacked off if that's what he did. A sneaky little tax raising exercise he could use is to freeze the tax allowances where they are. That is the rate at which you start paying tax and the level at which you move to a higher rate of tax. This would mean he hasn't broken the manifesto pledge not to raise tax, but could raise about 1.5 million people into high rate tax by 2024. The pension lifetime allowance looks to be frozen at 1,073,000 until the next election. This is the amount you can have in your pension pot before you get hit with punitive tax charges. In truth, in some 35 years as an IFA, I have very few clients, sadly for my clients, who will be impacted by this because most people don't save enough into their pension schemes. It's thought that only about 25,000 people will be affected, but it actually could raise about £250 million a year for the Treasury. Anyhow, this is all speculation at the moment, and we'll have to wait for the great man to speak on Wednesday. On a light-hearted note, I saw in the press this week that David Beckham has raised $4.5 million on investment into a cannabis farm. But hey-ho, and why not? If you want to see how the markets have performed, go to our website and look at the musings, and you'll see how they've performed over the last week, and in fact, on the year to date.